We have few suggestions in terms of like topics. So these are the buy ratings that our company has on. Some of the first one, Soil Build Business Space REIT. So they have a portfolio of business parks in industrial properties. Basically, it's business parks like what they have in Changi, near Changi side. They own few property, few buildings there, and so the reason we like it is the secular trend of decentralization of business activities outside of the city. You will notice that a lot of activities, like even banks, they are moving to these business parks now. They especially taking their IT compliance, their operation side to these business parks because it's cheaper, and so it helps them to cut the costs. And so that's one of many reasons we those who are those of you who are already our client can actually view the actual reports on these companies and then can read the reasons, drivers of growth and stuff like that to better understand about these companies. So, and then the second one is 800 Super, environmental service provider, essentially the garbage. So some people don't like these companies, but it's quite defensive because no matter the economy, how the economy does, you still want your garbage to be disposed of, and so you want these companies like 800 Super to be there. So it's quite defensive. Stable business model with superior ROE. So that's another one. Cogent Holdings, they have warehouses. They used to have a lot of warehouses in different places. What they have done now is that, and they used to rent those different warehouses. What they have done now is that they have built a very big one warehouse, and so it is helping them to bring efficiency and reduce costs. So you would say consolidating operations is helping them to reduce costs and then increase the return. So that is something that our department also kind of like. Valuetronics, they build, they manufacture actually some consumer products like shaving machines or the retro bulbs, the LEDs, and then they also make some industrial products as well. Reasons why we like this company is because it's cash rich and the dividend payout is quite good, and the earning growth according to the forecast should be better than last year. So that's why we prefer these. So these are the buy rates that we prefer, and we have the TP is the target price and then the last close price. And the last slide is. These are companies we have the accumulated ratings, and the accumulated is because the last close price is already reached close to our target price. These companies are like Cash Logistics. Cash Logistics is they also deal with the industrial so it's warehousing, but it's a REIT. So the difference between Cash Logistics and the Cogent is that Cogent is they develop warehouses, while here is the REIT. So they own these warehouses. That's it. They can only develop to 10% only. And the key beneficiary of the Singapore status as a regional logistic hub is the reason that we favor this company. Fraser Centrepoint Trust owns portfolio of suburban malls in Singapore, and there's a growth in the suburban or urban malls in a couple of years now. Singaporeans prefer to go to their nearest malls instead of going to those Vivo City and Suntec City far across in the center. So there's a growth factor inside it, and so that's another company. First REIT owns a lot of hospital in Indonesia. Now, I said so much crappy things about Indonesia, but then this company deals with the healthcare sector, and then the only reform, I said they haven't brought a lot of reforms. Maybe one reform that helped this company, this REIT, was that they introduced this universal insurance coverage plan. So last time, Indonesians cannot go out and get treatment for free, or like if they don't have money, basically they die, at home, or things like that. Now they have this coverage plan where the government is paying it, so it is helping the healthcare sector, and that is the reason we have this company here. First, and the last one is the Capital Land Retail China Trust. Shopping malls primarily in Beijing. And like I said, the Chinese consumer growth story is the reason. After the anti-graft campaign, you might have heard that in China, right, these politicians would spend a lot because it's not their money, so they would spend a lot into lavish items. And when the anti-graft, when the government started like catching these corrupt people, there was a huge slump in this year because now people do not have money to buy Gucci stuff or Prada or Dior and stuff. So the things are changing now because that was abnormal because not your money, you're buying stuff now, it went all the way down to normal rate and now it's picking up. So that will help this rate as well. And you will notice that the theme here is that many of these REIT and the companies like it in their super are quite defensive. So when you are in a place where there's a lot of volatility, you might want to invest in defensive companies because that's where you don't lose a lot compared to the growth companies where the volatility is quite high.